Hey guys. Well, today let's look at some let's analyze some deals from Des Moines, Iowa. Um, I've got my LoopNet pulled up here, and we're just gonna look for a property here. I don't have one pre-selected or anything. I'm just gonna see what we can find, and then kind of give you an inside look into how I even find these properties to analyze. So let's just go ahead and get started. Let's start with this one here. See, this is just the top of the list. So see what we got. This is looks like an older apartment building for 850,000, 5% cap rate, not phenomenal. We'll see what they think. Okay. The first thing I look at is if they're going to have documents attached. So I don't want to waste too much time on looking into this thing if I can't actually get any of the financials. So, oh, looks like this one does have the financials, so that's good. So let me just take a quick look here. Year 2026. So these are all pro forma projection numbers, not real numbers. So that's not very useful at this point. Demographics and income. They don't have any actual numbers in here, just pro forma numbers. That's stupid. Why would you not put your actual numbers in here? Let's see. Oh. Are you fucking kidding me? So they're keeping the numbers hidden from us so that you have to contact them or let's see. Yeah, sign a confidentiality agreement to get the numbers. That's so fucking stupid. Just give me the numbers. What's going to happen if you give me the numbers to look at? You're not giving away trade secrets here or anything. It's just an apartment. You're already telling me what the cap rate is, so I can figure out how much income you're making. And then how am I supposed to even compare these numbers to anything? These are just nothing numbers, just stupid shit that you came up with and put on a sheet. And you think that this is supposed to be some kind of convincing thing. To me, this is terrible marketing, because now I'm just going to go right past this. I'm not even going to look at it, because I don't want to call you and message you. It's going to take you a day to get back to me, and then now I'm off to doing something else. I just want to look at the numbers right now, and I want to calculate them, and I want to see what kind of deal this is. I'll never understand why agents do this. It's just to get contact information from people. That's the point. There's no reason from a seller's standpoint why you wouldn't want your buyers to have all the information possible so that they could make quicker decisions and not let it fall by the wayside. That's my opinion. I don't know. That's ridiculous. Okay. Forget you guys. Later, loser. All right, let's try this one. 1.4 million, basically 12plex. Looks like maybe built in the 70s or something. Let's see if they've got any financial information. Oh, it's 66. What the fuck? Are you serious? No financial information in here whatsoever. Not even the shit financial information the last guy gave us. So there's nothing we can even figure out here. Nothing we can even look at to even get started. Total monthly income is $12,370. Oh. Wow. Thanks. I guess we'll just do all of our financial analysis real quick off of that. I mean, what kind of marketing is this? We're just going to tell you the price, and we're not going to give you any information as to how we got the price, or why it's that price, or why you should pay that price, or anything. It's like, come on, the internet exists. We can do the financial analysis right now without me getting a hold of you, you emailing me, you getting whatever, blah, 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 all that kind of bullshit. We don't need to do that anymore. Just give me the numbers and I'll figure it out if I want to contact you or not. I'll figure out if I want to contact you because after I do the analysis, or else we're just wasting each other's time. Why would you want me to waste your time and my time getting a hold of you, playing phone tag, sending emails back and forth, getting financial when I might not even want to get in contact with you at all on this property? It doesn't make any sense. It's stupid. All right, well, let's try this one. 54 unit. Wow, 54 units? This must be in a small town or something. No, it's in Des Moines. $3 million. That seems like a decent deal just right off the bat. Maybe it needs a bunch of work. Oh boy, it's going to be confidentiality. Yeah, confidential. Fucking retarded. So stupid. Why would you keep that? Why? I will never understand that. Because this was one that I would seriously look into, but now I'm kind of pissed that they just want to, dick around and make me get a hold of them and do all that. I don't want to. I want to look at the numbers and then I'll get a hold of you. Okay. There's no reason you have to keep these confidentiality agreements. What is, what's going to happen? Some other apartment complex in town is going to see your financial numbers. So what? Who fucking cares? It's irrelevant. It doesn't matter. All right. Well, maybe we won't find one here, guys. Sorry, this is taking longer than I expected. Let's take a look at this one. See if we got any financial information. Uh-oh. This is the same guy. He's not going to have shit in here. Oh, no, he's got real stuff in here. Well, unless this is old and that was that was part of a projection as well. Because it's kind of weird that he's given us 2024. I don't know. I'm already suspicious that this is an overinflation. Let's see. Does it say anything about income? Why would this be so old, though? Date on market, 10/3. Huh. Well, maybe we'll come back to that one. I would prefer to find something that I can trust a little more than that, where it's clear that they're using current numbers. Let's see. Oh, never seen this before. Weird. I want to download it, but okay. Got me. All right. Let's see if they've got financial numbers in here. This is a legit offering memorandum where it looks like it's probably going to have all the information we need and a bunch that we don't need, but looks good the more pages it is, apparently. Okay. Let's see. These look like real numbers. Now here we got pro forma. Okay. All right. So at least, 2000. Are you shitting me? 2025 pro forma. Okay. How is it a 2025 pro forma? Was this thing listed? Go back. Oh, well, this is multiple properties. Listen, 2025. Two different properties. Okay. Laundry income estimated, garage 2024, actual tax. Okay, so this isn't really a pro forma for 2025. These are the actual numbers. So I think, yeah, might as well. Let's go through this one. This might be something, kind of a property you guys might be interested in. It's yeah, it's two houses, or well, this is a fourplex. Gosh, screwing up all over the place here. So yeah, that's a fourplex, and then this is some kind of added on to house with some kind of okay. Well, let's take a look here. This is interesting. I've never seen anything quite like this. So this is a very unique property. Okay, so this is standard. House looks like this house, which is right next to it. So they got a normal fourplex, maybe, yeah, probably a fourplex at that price. Maybe 6, 8, maybe 8. I don't know. If it was 8, that'd be great. And then this is the house next door to it. And they added on this monstrosity that is ugly as shit. But if it makes money, I can deal with it. Oh, got a bunch of garages here. 2, 3, 4, 5, 6, 7, 8, 9. Well, 10 that I can see. So, little extra thing there, I guess. You could rent them out as self-storage units if you wanted, or to the tenants as garages or storage units. This is a really poorly taken picture that is very yellowy and nasty looking. So, not very good marketing here. It feels like you're walking into 1975. All those pictures from back then, or like in the 80s where they were all yellowed and it's like everybody was in a smoke-filled room. So it's just very dim lighting, probably warm, dim lighting. Well, shoot. Why did it skip right past that one? There we go. Nope. Okay. So that's the kitchen. Looks like the appliances look decent. Look like they've got the old cabinets. They painted them and put on a new countertop. Living room area, entryway. Carpet looks decent. Looks probably like it's newer. Okay. Okay. And that's all for the pictures there. Proven upside with lesser rent comps. What does that mean? Priced strongly, located near Drake University. Okay, that's good. Value add 14. What? 14 units? Wow, that's a lot more than I was expecting. 14 unit multifamily asset features 13 2-bedroom units. Wow, and one bedroom. 12 garages. Current average rents are $833 a month, with upside to $895 a month. If this no, I that seems too low, but maybe it's just because they're outdated or ugly looking apartments inside. Built in 1914, that's probably the house. Properties at the new 7.97 pro forma cap rate, an attractive basis of 65,000 per unit. That is super low. That you don't see any anymore that at that price. Investors will benefit from reliable in-place income, rental growth potential, and long-term appreciation in one of the Midwest's fastest-growing metros. Des Moines ranks among the nation's top markets for affordability. Okay. right. So here they've got operating income of 76,000, which is decent. Okay. Price 915,000, 8% cap. You're gonna have to probably put money into this, so that's why they're giving us a higher cap, because they know that it's gonna take some work. Okay. All right, let's look at the offering memorandum. Let's see here. Okay, so there's the outline of the property. So that's good. It's got a lot of parking back there, it looks like. So they're saying pro forma net operating income of 72,000. But didn't it say here 76,000 for 2026? So this must be 2025. Okay. So this must be this house, I'm guessing. So I don't know how many units they're saying are in this house. How many units are in that one? So I'm guessing maybe 8, 12, and 2 here. Maybe the main floor and the second story. I guess we'll have to find out. So this is the old house, obviously built the thing built in 1914. So it's got the old wood fireplace, small windows there. So if that's a bedroom, it wouldn't qualify because those are not egress. Okay, kitchen somewhere. Decent cabinets. Looks like the countertop here is in need of some work. Let me zoom in here a little bit. There we go. Coin op laundry over here. Through the wall AC. Electric baseboard heat. Probably older windows. That would be something we should look into. Hard to tell what this flooring is. It's maybe just carpet, I think. Oh no, it's like a vinyl plank, I think, maybe, or maybe even sheet vinyl. It's kind of hard to tell from the pictures. And here's another kitchen. Painted black cabinets from the 60s. It looks like maybe a newer countertop, sink and faucet. Tiny little stove there, a little baby stove with little baby hood. So, but that's all right. Okay, so it's hard to tell which properties these pictures are from, but that's all right. So we already kind of looked at those. So here's where we are on a map. I don't know much about Des Moines, but here's Drake University. So there's the edge of the campus, it looks like. So really close. So probably be renting to a lot of college students. And Des Moines is a fast growing town too. So I think it's one of the faster ones in the Midwest. Population, average median. Does anybody really care about that shit? I don't really care. I don't know. I guess maybe I don't know. I mean, it's Des Moines, you know. Fast growing Midwest town. Okay. Yada yada comps. Don't care. More comps. Rent. This is how he got his monthly rent prices. These are his rent comps. Okay. 925, 870, 900, 1,000. You probably could just go on apartments.com or something and do a better, and get some rents, see what's around, because, yeah. You got some pretty low rents here for it's. I'm surprised there's a 2-bedroom apartment still for under $800. That seems wild. So, okay, let's take a look at the numbers. What do we got going here? Um, the offering price is $950. Okay, they're gonna maybe do a loan analysis for us. I never understand really why they do this, but so we're gonna put 285,000 down on this. No way. Not if I can help it. I want to find out at full price, can this 100%, can it be financed at 100% of a loan at 950,000? I don't want to know a loan on 665,000 and see if it can sustain that. Who gives a shit? I want this thing to pay for itself, every last penny, every last dime, for the rest of its life and the rest of the time that I own it. I don't want to put a dollar into this thing. I want the property and I want it to make me money. I don't want to give it money. I want it to make me money. And I'm not putting any money into it. That's my attitude. That's how I go into every one of these. Okay, so let's take a look. So they're giving us some cap rates, cash on cash return, debt ratio coverage. So they basically had to lower the loan way down so that the debt would meet the ratio requirements of the bank. 70% loan. No thanks. Okay. Rental income, current rent roll, 139,980. We got some good, so you got some laundry income, not a whole lot, about $100 a month. Garage income, 4,000 total. So about what, $350 a month or something. So they've maybe got like 7 of the garages rented. Utility rubs. Okay. So that's the ratio utility billing. So how that works is that generally the bills like water, sewer, electricity, gas, all those for the entire property. That's usually water, sewer, trash. There could be some electricity or whatever. All goes to the owner. Then the owner takes that, or the service that they provide or hire takes that. They split it up based on square footage amongst all of the apartments and then send you a utility bill. And then you pay that utility bill to the owner. And then the owner pays the utility bill, the actual utility bill. So it's a way to recoup the money lost due to utilities like water, sewer, gas. So it's pretty common. So they make 10,000. So let's see what they're. So, but down here, water and sewer is 13,000 expense. Electricity and gas is 5,000. Trash is 4,000. So they're not really getting all their money back unless it's just for these two expenses, because that would equal that would be a little over 9,000. So maybe it's just these two. I don't know. That's something I would probably want to look into. Why is the ratio utility billing so much lower than what the actual utility costs are? Because your utility costs are up around 22,000, and you're only getting 9,000 back. So that would be a question I would want to ask the agent. So lawn and snow, look at all that wasted money on lawn care and snow removal. Gross. But that's what it's like to live in a northern environment. Maintenance and repairs, 5%. So that's a pro forma number. I don't like that in there. Management pro forma number. So my guess is that this is a mom and pop or just a guy who does the maintenance himself and manages the apartments himself. Oh, shit. I was covered up the numbers. Sorry. I got to keep that in mind. Um, so, so yeah. Okay. So maintenance repairs, you see that? It's just at 5%. That's not a real number. And this management is not a real number because they probably self-manage and do the repairs and maintenance themselves. So those numbers are probably going to be higher. So we need to keep that in mind. I think, that the one side is super old. These are pretty old apartments. You're probably going to have more maintenance than that. That's about a little more than $1,000 or $500 a month. So you're at like $550 a month. It's probably going to be higher than that, I would think. I'm surprised the lawn and snow is so high because I would expect this person to be doing a lot of that too. So there might be some that needs to be added to that as well. Like maybe this is just lawn care and he moves the snow. So that might be higher too. This will most definitely be higher. And you'll want to do some upgrades probably to it. So you want to keep that in mind. Management, 5% is probably a little too low. I'd probably increase this maybe to about 10,000. 10% is actually a pretty standard management expense, and that would put us at 14,000. Double what they have it at. Okay? Double what they have it at. So I need to move my stuff to the other side of the screen, I think. Let's see. Okay, well the next one will be better. Okay. So net operating income and cap rate and ask price. So they're asking $950 net operating income. So that's this effective gross income after the vacancies, after you've collected all your rents, you get your gross, but then you have to take out your vacancy. They're just doing a 7% loss. I would prefer this to be the vacancy loss just wrapped into here. See what I mean? That would be like what they actually brought in. Whereas what all they're doing now is they're saying if all the units were full for the whole year at our current asking price, this is how much money we would bring in. Okay. And then we're going to use a random standard vacancy of 7%. But I want to know what your actual vacancy was. This is just a placeholder number that's just thrown in there. So maybe they only had 3% vacancy loss. So anyway, I like the real numbers. I don't like when they start adding in their own opinion numbers and standard practices and shit like that. You've been running this thing for probably 20 years. Why are you throwing in a random vacancy percent? So anyway, that's just me. I'm always suspicious of when people put stuff like that in there because I think they always do it in their favor. They're always going to try to make the property look better than what it really is. They're going to try to make it look like it makes more income than it really does and that has less expenses than it actually does. That's just the name of the game. That's how everybody does it. You're the one, buyer beware, who has to figure these things out and has to be hyper vigilant about really combing through these numbers and making them make sense. So I'm going to increase these numbers here. Okay. I'm going to say maintenance and repair. I'm going to double the maintenance and repairs because you're going to have some fridges go out. You're going to have, AC units go out because those things suck and they only last for like a couple years. And then you got to throw them out and put a new one in. So I'm just gonna go ahead and I'm gonna be more conservative. I'm going to increase I'm gonna increase all this by 10,000. Okay. So I'm gonna say the expenses are 85,000 so that the net operating income is actually 58,000, not 68. Okay. I'll keep their rent numbers because this is a pretty reasonably priced apartment. So I'm guessing that they probably are full basically all the time. And if anything, I don't know, maybe 7% is too high actually for this, but that would be weird that the seller would put in too high of a vacancy and take that amount of, income off of their analysis. So I'll keep with theirs. So if we got 58,000, okay, 58,000, which is my changed numbers, and we're going to divide that by 950. Let's see what we have for an actual my cap rate. So now we're at 6.1. Okay, that's pretty low, especially for an old property like this that looks kind of run down and looks kind of beat up. Um, so that's not great because let's take a look at what would a mortgage be for 950,000. Get rid of those shits. Okay, 950,000, 25 years, 7%. Got my calculator in the way again. And what do we have? So 6,714 a month times 12. That puts our monthly mortgage or our annual mortgage payment at 80,000. Okay. Uh-oh. Oops. So that's a lot lower than our 58,000. So we're $22,000 short. Okay. So let me see if I can figure this out and I can do this right. If we have $58,000 of income and we want a cap rate of, let's say, 7, that puts this at 828,000 valuation. 828. Okay. So let's see if we had 828 purchase price. So that's about 6,000 a month. That's 72,000. So even that cap rate's too low. So we're going to need to be in the 8s. $725. Now we're getting closer to what might be reasonable for what kind of money this thing's bringing in. Now we're at 60,000. So we're still $2,000 off, a little over $2,000 off, but we're getting closer. So now we're talking 725 for this. And that's might be something where we could actually make money on this thing. Okay? So I'll be interested to see how much they think the rents could be raised, because there might be something interesting going on there. They got the expense ratio. So that's basically what percentage of your income are your expenses. So the expenses are 53% of the income. Okay? 53% of 143. So just over half. So that's probably what I would expect. It's going to be higher than that, but it's probably just because they're bringing in too little of income. We want to see the expense ratio around 45 or so. It's usually pretty standard, 45. Okay. So now let's take a look at their pro forma stuff. This is where they get creative, where they try to sell you on the vision of how glorious it's going to be and how much money you're going to make and why you should buy this property. Oh, look, they've even got an assessed value in here. Okay. Well, we're not paying that. So I don't know where you're getting that assessed value. Sure as hell. Not gonna pay this. No way. So right away, I look at this and I see, well, they've only got the operating income. They only increased it by like $5,000. So hardly, I mean, that's hardly anything. So their rents must be pretty darn close to, unless they're saying this is just carrying on what they currently have. Let me see. 833 average rent. See that? This would be oh, so okay, so they are raising them quite a bit. Laundry income, garage income. Okay, they're telling us how they're getting these. So that's kind of handy. They're just estimating that. They increased the garage income by 3%, so you would have to do that. Increased the RUBS by 2.5%. Why? I guess I'm not quite sure how they're getting this number, because it seems this RUBS number seems too low to me. I don't think that's, yeah, I think that should be higher, probably. Okay, so vacancy 7% still. Hopefully it would be lower. Okay, so here we go. Property taxes. Did they not have property taxes? Oh yeah, they did. Oh, I kind of skipped past that. Okay. Well, what we do want to know is we want to know, usually they have the assessed value on here. This does not show it, but there's no fucking way that this thing is assessed for 1.1, over $1 million. Fucking kidding me? How in the world? They don't tell us what this is based on, but if their tax rate is 2%, let's try to figure this out. Let's say it's less than 2%. Holy fucking shit. It is assessed for over $1 million. Whoa, this guy's getting fucked on his property taxes. This property is not worth that. How in the world are they getting that number? That's retarded. What in the world? Okay, well, so I'm thinking this thing's worth like 725. So this guy's not going to sell it for 725 because he's got in his head now that it's worth $1 million. So they're just under 2% in their tax. So at 725, the tax should be 14,500. So if you could get it for that, you would go to the assessor and you would complain and you would show them your paperwork, what you purchased it for, and get him to lower this by $5,000. So there's maybe some savings there or something. I don't know. That's crazy. You know, they usually assess it much lower than what it's worth. They're assessing it way over what it's worth. So stupid. Okay, so insurance, water, sewer, electric, gas, trash, increase. Okay, good. Snow and lawn, and these are still too low. Okay. So, you know, we're not really getting anywhere close. What was the mortgage payment? Oh, shit. Did I do that wrong? Did I do that wrong? 58. Yeah, no, I said that net operating was 58. Okay, so going with that, we're going to take 10,000 off. So we're at 62. I'm just going to keep the same. I'm going to increase these two categories by 10,000. So I think that's fair. So that's going to lower this operating income by 10,000. So we're at 62,000. Okay. So it's basically going to pay the mortgage. 61,500, and we're at 62,900. So doesn't really leave much room for error there. So that's my conclusion. Basically, that's what this property would be worth. It would be 725. Yep, 725. I wouldn't really even consider. I mean, I know I'd be a hard sell probably for me to even consider it at that, because this is gonna come with a lot of problems because it's an older property. It's gonna come with, you're gonna put in new flooring. These cabinets suck because they're super old and they're gonna stink, and the doors are gonna be broken, and they're gonna be covered in a film that you can't ever get off of them, and the appliances are gonna be beat up, and the plumbing's gonna leak, and you're gonna get pinholes in your copper lines that you're gonna have to tear open in a wall to fix, and all that kind of stuff, because this is such an old property. They should be giving you a good deal on this. Now, 14 units, I'm still shocked they can't get, they should be, gosh, I don't know. In my opinion, you should be getting close to $1,000 for a 2-bedroom apartment. If you did renovations on this, you might be able to get these up to $1,000. So, that puts you at, so let's say 1,000 for the 2 beds, and then for the 1 bedroom, let's say you get 800. So that'd be 13,800 a month times 12, 165. So make about $20,000 more. Okay, see that? How I got that? About 20,000 more here. So let's just say that's 20,000 more than our 62,000 that we adjusted this to. So we'd be around 82,000. Now that might be worth it, but then you'd have to figure out how much money you're putting into this thing to get $1,000, because you're probably going to put in new kitchens. You're going to make these things look nicer so that you get a higher rate. So with 14 units, you're probably talking something close to $300,000, like conservatively. So just, about $20,000 a unit. So you're going to put in $300,000. So that essentially would make your purchase price just a little over $1 million. So this assessed value, in my opinion, is basically the value is if this thing were renovated and all the rents were up to like top market rent, and same with their asking price. It's sort of like, if all the work was done, that's what it would be worth. And if all the rents were up to the top of the market, that's what it would be worth. But as it sits, it's not worth it. So, if you were able to get this to, what did I say, 82,000? Whoops. Let's see. It'd be worth just over $1 million. So it would be, if you put 300,000 into it, but that's going to have to be cash, most likely. It probably just isn't a way to get this to work, because it's not going to cash flow enough in order to pay for those renovations. So you're going to be infusing money into it, which is fine because you'll be getting it back in valuation. if you want to put that kind of money into it. But and obviously, you'd be putting that money into it incrementally, so it wouldn't be one huge injection of money at one time. So maybe like it takes you a year to renovate these, so you're only doing 20,000 extra a month, and then at the same time you're increasing the rent on the ones that you renovated, so you're kind of getting money back as you go. So, um, but yeah, that would be kind of how I would look at this. Overvalued and probably not worth doing unless you can get it for a really good deal, which I would doubt because you basically need to get it 30% off. Just depends on how negotiable they are and what they have, for a mortgage or whatever. So, okay, well, that's my opinion on that one. I would I would probably burn this one. I would not buy it. I would just move on, look for something that's already done, that's in a nice area, that just need the rents raised basically because the people have been too negligent, or the management company on increasing the rents along with the market. So this one's going to require too much out of you. It's going to require too much cash. It's going to require too much risk, and it's not going to be something that you should probably even deal with. So burn it and move on. Okay. Well, there we have it. We found one to analyze. So, all right, guys, if you would like and subscribe, that would be great. If you have any questions, put them in the comments. I also have my email address on YouTube. If you want to send me a deal to analyze, I'd be happy to analyze it live. If you want to call in, we could do something like that and we could analyze it together. So just, yeah. Uh, hopefully this was helpful, and hopefully it'll help you on your real estate journey, and hopefully it'll help you get rich. All right. See ya.